Welcome to Things Invest. We talk about investing, finance, and professional development. As a recording time of 7:26 a.m. on Eastern Time, Ethereum coin trading $2,212. That's about 12.90% so far. As you can see clearly on the overall crypto market and the equity market, we are experiencing, a correctional type of dynamics at the moment among the markets. It seems like there are a lot of negative news that's percolating among the media affectation. And this is something that we have seen in a foreshadow perspective during this weekend from Goldman Sachs, and obviously on the Fed's meeting schedule that we're going to be having on Tuesdays and Wednesday on the economical outlook on the U.S. economy going forward, triangulating the tapering, obviously the interest rate hikes that Jerome Powell has allocated for us, the four specific ones, and based on Goldman Sachs, on their forecast projections in their letter to their investors during this weekend, they've laid out that there's going to be one in March, there's another one going to be in May, September, and November, respectively. So it seems like it's like approximately about like a 2 months to like a 3 months interval dividing up the year, right? However, the 4 counts on the interest hike is more of I would say approximation. It's not confirmatory yet, right? Nor the timing of it has, any confirmatory signal from the Feds yet. So we might hear more specificity from Jerome Powell, tomorrow and the subsequent days on Wednesday, as we get that publicly, announced. That will give us a little bit more clarity around how to play or how to adjust our portfolio risk management level accordingly, right? In addition to the basically the blockbuster meeting that we'll be having tomorrow and on the subsequent day on Wednesday, we also heard negative news coming out from Russia. So in addition to the crypto ban news that we've heard on Thursday when I was on vacation, it's definitely not the most opportune time to hear news like that, that they're potentially thinking about banning crypto coming out from the Central Bank of Russia. In addition to that, it seems like there are some tensions between Ukraine and Russia, and the U.S. States of Department, on the Defense Department, they are urging U.S. citizens of Ukraine to leave the country immediately. And as Russia is, military is building up their military defense and offense line at the border, and they show no signs of dissipating. Okay, so it seems like the tension is definitely percolating up, and Russia has repeatedly denied it's preparing to invade its neighbor Ukraine, despite stationing around 100,000 Russian troops at various locations along the border. Okay, so seems like this is a defensive act, right? But in terms of, is this like a full blown battle between Ukraine and Russia, or is the war coming? Analysts on Wall Street and also economists and political figures have publicly announced that they do not believe that this is a full blown battle or some sort of political war going on. This is just like a preliminary perspective of it, right? And I know based on the verbiage I've been reading across the news today that Joe Biden is planning on supporting, on defending Ukraine on that front. So that could technically, incur more tension between U.S. and Russia, which is not something we would appreciate. We ultimately want to have that, harmony in a global perspective. But this is something is still developing. We do not have specific confirmatory signals from the countries, despite what we are seeing so far. Again, the news is relatively updated, but we do not know how it has progressed so far in the last 24 hours because, again, the news are relatively old news, and the market is adjusting this in front of our eyes right now. Again, the market is trading on a lot of the psychological affectation rather than fundamentals at the moment, right? So it's important for us to stay within the frame of reference that we have logically defined for ourselves and not get shaken, right? Despite how uncertain the market looks like at the moment. And this is not just domestically, but now the international side of the house is also being implemented onto the equation, right? In addition to that, we also am expecting multiple large cap tech stocks earnings to be coming out this week, right? Apple, Microsoft, which are major needle drivers. You can just look at their market caps respectively, right? Apple is like close to being 3 trillion in market cap. If they drop, that could be a needle mover, and that could influence the tech sector to either go up or go down, like similar to how Tesla is affecting the overall market as well. Whenever you see large needle drivers type of stocks, get shifted either negatively or positively, it will have that direct correlation on dragging the overall market to go up or go down. Similar to like the way that we have been talking about Bitcoin dragging the overall market to go up or go down, right? And then the subsequent small cap tech stocks will be following along with it, right? So definitely a wild storm in front of us, right? We are experiencing pandemic, we're experiencing war, we're experiencing famine, we're experiencing, the government trying their best to triangulate all the murky water, if you may. So it's definitely heart wrenching. It's definitely one of the craziest roller coaster rides that I have been on, and that I have seen in my investment career so far. And I mean, I haven't lived that long, so apologies for my immaturity in terms of me explaining this, but this is definitely one of the worst in combination of all the factors on a macro perspective that we're seeing so far. So let's just dive right into the technical, shall we, in terms of triangulating this. And as of recording time of 7:34 a.m. on the Eastern Time, on a pre-market perspective, you can see clearly our Dow Jones is down about 0.16%, Nasdaq is down about close to 3%, so this is definitely correctional territory, and also S&P 500 is down about 0.4% as well. And on the crypto side, we can see clearly that Bitcoin is down in 8%, and Ethereum is down about 14% at the moment. And the altcoin side of the house are bright red. I would say we are approximating to down about 20% collectively. Okay, so no need to waste more time. Let's just dive straight into it. So, respective recording time of 7:34 a.m. on the Eastern Time again, right? Ethereum is currently trading at $2,208, down about 13%. And the level that we identified so far, if I zoom in a little bit more so we can see more, clearly, is that the 2,150 would be the next level of support that we need to get to. And again, we're trading purely on technical support now, rather than an actual fundamental trade. Right now, it's extremely discounted, right? You can see clearly we are flying off the cliff on the MACD front, so that shows just a lot of negative inertia dragging the assets to go down. And also on the RSI front, we are dipping relatively sharply because of the negative affectation that we're seeing right now. And mainly what's selling off right now is just high uncertainty, high panic, because we don't know how the war is going to be playing out. We don't know how the Fed's meeting is going to be coming out. We don't know how the the earnings calls is going to come out. So a lot of people are just freaking out, selling on a loss rather than to have to sustain the pain. Like, are we at the bottom yet? Are we at the bottom yet? But we know the technicals. We know that we are crazy, extremely oversold. And this is the worst I've ever seen in my life in terms of history. And this is probably one of the very first times that you see the market showing some signs of correction or like a crash. I don't think it's a full-blown crash yet. And I've been getting some questions around, are we gonna go to like the low 1000s again? I think based on the current setup right now, that will be not the most logical, because of the fact that we are already drilling oil, finding fossils, looking for dinosaur bones or dinosaur eggs, if you may. And right now we are going to bounce from the 2150, right? And remember, we have already seen basically 2 months of consecutive sell-offs, right? Eventually, the market's gonna readjust, right? We're gonna be more resilient, and it's gonna rebound from there. And I think the institutional investors are slowly looking in or peeking in onto looking for the right opportunity. And right now, what's the worst case scenario? We have to basically tank the market for us to readjust, right? And I think, are we close to being completely tanked yet? And the reason I say tank is relatively, kind of not the best word to describe it, but in order for us to psychologically realize that, hey, we might be overdoing it, you have to give some sort of a shock factor onto the market. So by tanking the market, it will incentivize people to buy in, and the leading effort will be coming from the corporate investors, right? So mentally prepare yourself. But if you're holding, you're fine. I would be worried if you are leveraging or using debt to be buying crypto at the moment, because if you hit a margin call, or if you like on the stock side as well, that could be detrimental to your portfolio, right? So something to be cautious about. So with respect to Bitcoin right now, we broke through the 34. The next level that we need to get to will be obviously flat levels right now. We're basically trading on a flat level at the 33,500 at the moment, down about 8% respectively. You could see that clearly we tested the 33 exactly earlier last night, and right now with the 22 out of 70, so still extremely oversold. I think it'll be a stretch to get down all the way to 30. Do we see like Bitcoin getting down all the way to 25 or like 10,000? I think that would be a crazy stretch, because that would be like down about 135, 140% from all-time high. And that's enormously, firstly, it will drive a huge outlier onto the standard deviation. And secondly, it wouldn't make much logical sense in a short-term perspective. So I would say Bitcoin, Ethereum is still a buy, and I would capture your capital, and capitalize on all of these fear and uncertainty. And I think the best opportune time would be around now, because when fear is all time high, that's when the robbery goes on for us like logical investors, and we'll be rewarded royally as the market rebounds from here. Dogecoin's at 1281. Anywhere from current level to 1201 is still logical. Again, 32 out of 70, not as oversold in comparisons to Bitcoin and Ethereum. So I'll probably not touch this, to be honest with you. I think more opportune level is at Bitcoin and Ethereum. Cardano's now about close to 14%. We broke below $1 again with 36 out of 70. So I do not like this either, because it's not as attractive as a 37 out of 70. So in comparisons to like the 20s, like it's a more of a relative exercise now, right? We are all oversold across the market. It's just about which one's more extremely oversold than which one's oversold, if you may, right? So I'll probably not touch this right now, but if you really believe in Cardano in the long term, anywhere from current level all the way to the bottom at 90 cents will be logical. Solana is down about close to 20%. Right now, we basically try to get down to the next level of the 67. With the 21 out of 70 so crazy oversold, so Solana is a good hedge if you believe in Ethereum, because they have comparable value proposition. So makes sense if you are interested into incurring risk. And I think really oversold right now, despite how bearish it looks right now. And I think maybe placing some limit order around like 67 or at the current level as 80 is logical. XRP is down about 9% right now. We are bouncing basically around the resistance level that identify, and that's the exact reason why we're hovering around this level right now. Do we see further low? No, I don't know if that's logical. We had to really deplete a level at the 25 of 70. And then the next level that we could technically get down to would be 50. So we have like 5 cents. So the risk versus reward ratio is not terrible. So I think incurring risk at XRP, if we believe in this long term, is logical. Polkadot is down about 12.5%, 1624 at the moment, 26 out of 70. I think right now Polkadot is not terrible either. It's definitely much better. And I think right now we're in the consolidated area. That's why we consolidated this way long ago, back in July of last year. The rock bottom technically will be 10 cents, so you do have like about $6 drop from here. But I think getting to $10 would be a big stretch, to be honest with you. So I don't really see that coming. We're pretty much rock bottom already. So I think maybe hitting 15 because it's a flat number would make sense, because you do have a bunch of consolidation area here. Algorand's down about 16%. We're just like a falling off the cliff type of this is like a knife falling off and you try to catch the knife right now. 25 out of 70. So I think rock bottom technically, based on the technicals right now, is 83 to 60. 80 from here. Shiba Inu is flying off the cliff again. Anywhere from like moderately take the risk around current level all the way to 70 to 80. MACTech is down about 18% as well. We're basically hovering between 143 and 120. So the next bounce is going to be 120. I don't see 70 because that was a flash crash from a whale dumping a huge chunk from the portfolio. So 120 will be the next one. AVAX down about 14%. We're bouncing from 60 to 50. So I think placing your limit order somewhere around like 50 would be logical based on the frame of how much we can potentially drop. I think 50 would technically be bottom. And then Luna, down 14%. Again, we are hovering approximately $2 below the resistance level, 62, 52, 45 from here. And with respect to risk management level, these are levels identified so far. As you can see clearly, we are very much at the attractive and steal level in the respective coins that we have identified here. It's definitely not the most comfortable. It seems like it's just been weeks and weeks and weeks of macro negative affectation, but just hold strong, right? This is some sort of a roller coaster you have to get through, but eventually you'll come out just fine, right? It's like that same type of roller coaster type of affectation. It feels scary, when you're on the ride, but eventually you gotta come back. You might have, you might want to throw up a little bit because it's just like the G-force is so crazy. But you'll come out just fine eventually, because the market has to go through the cycle. But now we're just like at the worst of it right now, right? So hopefully this is helpful. Really appreciate you for dropping by again. Hope you guys have a good Monday and take care.